Okay, I think we can go ahead and get started with the introduction. Welcome back to the Alir Treasury Experience Day 2. Our first session of today is Payments Fireside Chat, Changing Payments Landscapes in the United States with Alir's Carlos Conde and Brian's Bulhabdi and Rishi Munhal. A few quick reminders for this session. Attendees have been placed on mute for the duration of the presentation. If you have questions, please submit them in the chat to panelists or in the Q&A portal, and we will answer them at the end. We will have a few poll questions throughout the presentation. Please respond, and our presenters will use that information to cater our presentation to the audience that we have with us today. This session is available for 1 CTP credit for attending the full 55-minute session. There will be a link at the end of the presentation to the CTP exam, as well as the next session. And with that, I will pass it to Brian.
Hey, thanks, Maddie. Thanks for that introduction. And we're going to introduce ourselves real quickly, and then we're going to jump right into the session. I'm Brian Bulhabdi. I'm Senior Director of Product Marketing at Kyriba, responsible for a lot of the product positioning and the development of content for all of our product pillars and our technology. And very happy to be here talking about payments in the US. Rishi, I'll let you go ahead and introduce yourself as well.
Thank you, Brian, and welcome everyone. My name is Rishi Munhal. I'm VP of Product Strategy here at Kyriba. Here my focus is particularly on payments. In the past, I've been working with stakeholders across the payments value chain for the last decade or so, helping launch new payment products, as well as helping clients enter new markets, and in some cases also helping them execute organic and inorganic growth strategies. So really exciting topic, and happy to be here with Brian and Carlos to have this chat. Carlos, over to you.
Yeah, thank you, Rishi. Carlos Conde, I am a partner and our Treasury Center of Excellence lead here at Alir. So I oversee all of Alir's treasury offerings, including Kyriba. And I am very honored and glad to have Kyriba here with us co-presenting today. And with that, I will send it back to Brian.
All right, thanks, guys. So today, our agenda today is we're really going to talk about the changing landscape of payments in the U.S. And really, what is the current state of payment digitization in the U.S.? How are things changing? Is it something that's new? Has it been around for a long time? What are some of the implications of that digitization? And where is the U.S. really in relation to some other areas around the world? And so looking at that, also really, as you talk about payments digitization, what are some of the major developments in the US payments landscape, in particularly around real-time payments and open banking? And then finally, taking some of the open banking and some of the new technologies that are available in the changing and evolving landscape as it relates to corporates and banks and Fintechs, really how do these developments help support digitization and advancement of payments really here in North America? And so with that, and then hopefully we'll have a few minutes at the end for some Q&A before I jump to the next slide. So we're going to start out actually with a poll question and get some audience engagement here. Maddie, could you lead us through this first poll question?
Yes, you should see the question appear on your screen. Is your organization currently moving B2B payments away from paper checks to electronic payments? Yes, no, or not applicable for your organization? We'll give participants a few moments to answer this.
Sure.
All right, I'm going to close the poll and then share results.
Yep, as I expected anyway, and I'll let Rishi chime in here as well. And really, as expected, there's a continuing move. Vast majority of you, 78%, are moving away from paper checks, and that's not surprising. Rishi, do you have anything you want to comment on? Is this something as expected? And maybe also one thing is really, yes, we're moving away from checks, but how fast, right?
Well, the results aren't that surprising for me. In fact, one of the recent AFP polls that I saw showed that about 70 to 75% of the organizations are in the process. So it looks like the folks that we have on the call and the organizations that they represent are in some ways representative of what's going on across the US in terms of transition from paper checks to electronic payments. So very much in line. Now, to your other question, Brian, about how fast this transition is happening, well, not fast enough is what my response would be, and we'll get into some of the data in the subsequent slides.
Yeah, absolutely. Let's get into the next slide. I'm going to advance it. There we go. So really talking about what is the current state of digitization in the US, and Rishi, I'm going to invite you to talk about this slide and kind of give us some perspectives on what's happening as far as digitization and that move away from checks.
Absolutely. So I think it will be important for us to talk about what we mean by digitization before we describe the current state of it. So in my mind, digitization is really in two parts. One, from a payment type perspective, which is where we talk about moving away from paper checks to electronic forms of payments. And as you can see, in the US, checks have been declining for decades now, and the trend will likely continue in the future as well. We stand at about 42% of B2B payments being dispersed by organizations as checks based on some of the recent data from AFP surveys. And it's still relatively higher when we compare it to the rest of the world. Now, the second aspect of payment digitization, which I want to emphasize more because that's where most of the complexity lies for our corporate customers. So any corporate or any business or even a nonprofit for that matter has to pay and get paid. And to be able to do so, they need a set of payment processes in their organization. There are people in specific roles for initiating payments, authorizing payments, reconciling payments. Teams can often be regionally or even globally distributed depending upon the size of the organization. In some cases, there could be multiple ERPs based on how the organization has evolved over time. And on top of that, there are hundreds, if not in some cases, even thousands of bank accounts that an organization has to maintain or manage to be able to see to be able to manage all the cash they have and the liquidity they have. And in some cases, I've even seen that organization maintain their own connectivity from the ERP into the banks, which makes it even more complicated. So overall, from a people, process, and technology perspective, organization can tend to have a lot more complicated operations than they need to. And that's where some of the solutions that are specialized in payments orchestration can help reduce that complexity. And the more complex your operations are, it's likely that you have custom processes, in some cases even manual processes that you have to put in place to be able to function on a day-to-day basis. And that's an important aspect of digitization that I don't want to I want to emphasize even more than digitization of the payment type. And clearly, compared to the rest of the world, US is behind. And we can take a few examples here. Like for instance, when we compare US to the rest of the world in terms of checks, I mean, clearly we have a lot more checks in our payment mix than it needs to. When we compare our payment infrastructures with the rest of the world, I would say that some of the other countries have made much bigger strides in terms of modernizing their payment infrastructures, in terms of new payment formats like ISO 20022, and some developments across cross-border payments as well, compared to some of the Asian markets where the adoption of e-invoicing has been much higher relative to the US, and even B2B e-commerce has taken off. So all these are differences, but US is slowly but surely catching up. And with some of the recent developments that we're going to talk about and some developments next year, I'm very optimistic that US is going to catch up to the rest of the world.
So we're late to the game, but it's been an evolution, and we're just taking a while. And I think with checks, but one thing you mentioned with checks and the integration with ERP and other systems is that that streamlining, that efficiency, and the taking fraud prevention, for instance, or the automatic taking away the batching and the manual processing, all of these things in an integrated payment hub, if you will. You don't realize all the benefits that can be realized when you talk about that you mentioned, that ERP integration or other procurement system integration with through a single payment hub can be realized even faster as well. That's very interesting. So thank you.
So with that, I think we are set to talk about some of the trends. Brian, what do you think?
Yes, let's move on to some of the major developments in the U.S. Now we're going from, we've level set. Let's talk a little bit about the U.S. payments landscape and really what are some of the major developments that we are seeing. And one of the most prominent ones of recent news is going to be real-time payments. And we've heard there's a lot of buzz out there. There's a lot of events happening, a lot of new players. Fintechs are providing these services, and the banks are on board as well. But really, we're going to talk about that and defining really what are we talking about here in defining a little bit of the landscape first. So Rishi, would you like to kind of guide us through some of these different attributes of a payments landscape?
Yeah, absolutely. And I think understanding the core components of what it takes to move money from a payer to payee is an important first step to explore this trend. So really, for the purpose of the conversation today, what I thought would be important for us is to talk about 4 key components. And the first one is the infrastructure. We can call them networks. Sometimes you call them payment overlays. Essentially, the core infrastructure that is typically either owned by a private institution, in some cases, owned and operated by the central bank of that in that region. Those are all the core infrastructures. Like for instance, in the US, we have Fed ACH, Fed Wires that is operated by the Federal Reserve. We have the ACH, which is operated by the clearinghouse, which is essentially a consortium of some of the largest banks in the US. Now, all these are payment infrastructures that enable that movement. And especially in the US, we've had some of these infrastructures for many, many decades. And real-time payments, I would say, is perhaps one of the single most important development that has happened in the last few years since its launch in 2017. Second component is the payment type, which is essentially the form of payment that is used by the end customers or even the corporates to make payments. So in the US, we have, of course, ACH, wires, cards, and now real-time payments are important payment types that are critical for us to understand and look at it from a payments digitization perspective. The third component is connectivity. Now, you can have an infrastructure, you can have a payment type, but you need a mechanism to be able to connect to your provider or the infrastructure for that matter. In most cases, the infrastructures are accessible only through the banks. In some cases, you have payment services providers also that connect directly into the payment infrastructure. So you have multiple options there in terms of who you want to use. But it's important to note that you have options both file-based, which is more of a traditional FTP kind of connectivity, as well as much more modern connectivity standards like open APIs. So both options are out there today, depending upon who your financial institution is or your payment service provider is, or for that matter, who is orchestrating payments for you in terms of a third party. And the final component is really the messaging standard, which is nothing but a unique specification that is outlined by the entity that owns and operates the network. Like for instance, NACHA has its own standards in terms of what the file format should be. Similarly, real-time payment systems follow some of the modern ones, especially follow ISO 20022 format. So all these are the key components, and as we talk further, you will understand why this is all relevant and important for us to understand as we define what real-time payment looks like.
Thanks, Rishi. That's a good overview of the key components, and it's important to have a good understanding of that. So really, where are we here with real-time payments and some of the key characteristics and the settlement and clearing?
Yeah, sure. So when we talk about real-time payments, there are a lot of different terms that are thrown around. We talk about faster payments, we talk about instant payments, real-time payments. For all practical purposes, these are all interchangeable. And what they all refer to are modern payment infrastructures that enable in real time or near real time movement of money from payer's account over to the payee's account. So the clearing and settlement happens within a matter of seconds. There are different SLAs that each of the infrastructures mandate, but for all practical purposes, they are real time to those using that system. One of the important characteristics of these systems is that they are unlike some of the traditional service systems. They are 24/7, 365, available 365 days a year. So they don't have any cutoffs, they don't have any bank holidays where you won't be able to access those systems, which is huge in terms of giving organizations, both consumers as well as corporates, flexibility in terms of how and when they want to transact with the payment ecosystem. One of the key distinction or key value proposition for some of these real-time payment systems is that they have modern and data-rich formats. So what that means is that they're not only good for straight-through processing, but are also, I should say, supportive of any downstream automation that you may want to do, which may be unique to the way you do business. So this gives you a lot of power in your hand, and it's up to you as a corporate and some of the providers in terms of how they help you drive more automation in your payment processes. And finally, I would say certainty and irrevocability are some of the key characteristics of real-time payment systems. So let's maybe contrast with ACH, for instance. So if you look at ACH, you may initiate ACH today, but you may not know whether that payment was successful maybe until the next day or maybe a couple of days after. Sometimes that can happen with wires as well, even though wires are irrevocable. With real-time payments, the payer can be sure that when they initiate their payment, they get a success or a failure notification within a matter of seconds. So they can be certain whether the payment went through or not. So that's in a nutshell what it is. In terms of where the real-time payment systems fit in the broader classification, I would say they are really classified as retail payment systems because they tend to have lower transaction limits relative to wires. So if you want to make a $5 million or $10 million payments, you would never use a real-time payment system or even ACH, which is our batch retail payment system in the US. So those are some of the characteristics and I would say contrasts to the traditional payment infrastructures that we have in the US.
And Rishi, that's a great point about the limitations on the limits currently set at $1 million for RTP for real-time payments, and then ACH is also trying to keep pace with that. But do you see the limits expanding and increasing in the near future, or is it going to be a little bit of a longer term horizon for moving that up to say to $5 million or 2 million? But where do you see that increasing, and have you heard any news on that?
I definitely believe that as more and more payment flows through the network and the network better understands the underlying risks, they would be willing to increase the limits even further. In fact, when real-time payments started back in 2017, I believe the initial transaction limit was $25,000. So since then, we have already gotten to $1 million. And although it's a significant step in the evolution of real-time payment systems in the US, it's still not big enough for many of our corporates that tend to have much larger value payments when it comes to any counterparty payments that they make. But it's in the right direction. It's really it's hard to predict when the next increase will happen, but it surely will.
Yeah. So major treasury settlements are probably out of the question for larger corporates, but it could be something in the horizon in the near future potentially. So that's great. Shall we move to the next slide?
Yeah, absolutely. So yeah, I think having defined what real-time payments is, it might be useful for us to see what real-time payment infrastructures look like globally. As you can see on this map, it's the payment systems are on their inevitable path to becoming available and ubiquitous globally. There are about 60 odd real-time payment systems across the world, and many more are coming live in the next 2 to 3 years. So from that perspective, I think the supply side is all taken care of. We have enough supply of real-time payment systems. And if I were to make an educated guess, I would say close to 3/4 of the world population has some form or in some form or fashion, they have access to a real-time payment system. And by extension, the businesses that operate in those regions also have that access. I've seen some forecasts, and some of the forecasts suggest that in the next 3 to 5 years, close to 1/4 of the payments would be flowing through these real-time payment systems, which is exciting because it makes businesses more efficient. It improves the end user experience. These are all great developments that are happening globally.
Excellent.
So if we now perhaps look at the US, where we are in terms of real-time payment systems. So we have Zelle and RTP as the two live and operational real-time payment systems today. As I mentioned earlier, RTP, which is owned by some of the largest banks and operated by the clearinghouse, which is a consortium, has been around since 2017. And in terms of the SLA that's defined in the US, every payment has to be settled cleared and settled within 10 seconds. So that's something that has to be met by all financial institutions that participate in the network. Now, we have, of course, a very important historical launch of FedNow, which is next year, which is a competing real-time payment system to the one that is operated by the clearinghouse. It's a welcome development in some ways because, in my opinion, when FedNow does go live, it'll change the perception of real-time payment systems in the US. It'll become more of a change. The perception is likely going to change from being something that is nice to have to something that every organization must have and must invest in. So I'm really excited about that. In terms of the deposit account coverage, close to 50% of the demand deposit accounts have access to real-time payments, and it's growing as more and more financial institutions connect to the network. However, if we look at the level of adoption in the US, it's still at a nascent stage. We're still developing early adopter stage. Purely in terms of transaction volumes, I would say we are close to 1% of the transaction volume in the US. In terms of transaction value, we are close to 0.5%. But we're growing fast. It's growing double digit. So a very positive outlook of what this might be in the next 5 to 10 years. Anything else, Brian, that comes to your mind?
Yeah, no, I was going to say, and I was going to just add on to your point about the small level of transactions that are going through in volume and spend that are going through as real-time payments. There's an enormous chasm of opportunity there for this to take place. And I think with I think we're going to talk a little bit more about the benefits at a couple of slides here, but the fact that you're settling so quickly is just a lot of, I mean, there's just so many benefits to that. Being able to know for within seconds that your payment has been sent and that it's been received by the financial institution, the clearing system, and then that it's being transmitted to the payee or the beneficiary is that's a huge value proposition right there. And then of course the availability. That's just something that's unprecedented in the U.S. And you mentioned that this is a new clearing system, and it's a new payment rail that is it's the first new one, I think, and correct me if I'm wrong, Rishi, but this is the first new one since like basically in decades that has finally taken shape. And I think this is very exciting. This is a very exciting slide to just understand that this is really now live and ready to go here in the US.
Yeah, and I'll add a fun fact, which many of the audience may not be aware of. So the core technology on which the real-time payment system RTP was built is actually from UK. So there's a company called VocaLink that owns and operates the UK faster payment system. It was acquired by MasterCard, and then MasterCard licensed that technology to the clearinghouse, and then clearinghouse finally submitted the proposal to the Fed Reserve and eventually came out as a winner. So just an interesting fact how we are in some ways related to the developments that are happening outside of the US.
Yeah. All right. So now we're going to talk a little bit about the support of digitization in the US and how does real-time payments play into that. And we're going to start the section with a poll question, another fun opportunity for everyone to get involved. Maddie.
Yes, you should see the second poll question pop up on your screen. What is the current state of real-time payment adoption in your organization? I'll give you a few moments to answer this.
And I guess if you don't know, you can always answer no current plans or something, and that way we'll kind of bundle everyone in there.
All right, we're at about 70% participation, so we'll close it in about 10 seconds or so.
Get your answers in quickly. Here they are. We closed it out. Okay. Rishi, I'll let you take the lead on any insights or assertions that you can make from this poll result.
Well, the poll results are not at all surprising, I should say. The adoption of real-time payments has been much more on the consumer side and less so on the business-to-business payment side. And there can be a lot of factors, of course, in terms of why that is. A lot of I should say, corporates have been, since the announcement of FedNow, have been in a more of a wait and watch. They have taken a more of a wait and watch stance, so they haven't made any investments. It does another thing unique about real-time payments is that you need to really think about use cases where you want to use it. It's not really meant to be a replacement for ACH. So you would likely have ACH and real-time payments coexist in the foreseeable future. So there is a little bit of an effort on the part of the organization to think about where it applies, where it can benefit, and make the investments appropriately. So it's not surprising that majority of the folks on the session are still exploring, but I'm hoping that by the end of the session, we can give you some useful inputs here to be able to explore your thinking here in terms of the use cases.
Well, and it's really promising to see that there's 18% roughly that are either they're ready to enable it in the coming months, or that they're already using it through Kyriba or from another party. Like a bank or another service provider. So it's good to see that. And it's also a little, I guess it goes with the territory that there's going to be a certain set of population that's just not going to be, they're not interested, or maybe their business model may not support it, or they just don't have a need for it. But I think, yeah, like you said, in the coming slides, which we'll jump into now, we'll talk a little bit more about those use cases and some of the benefits as well. Let me close that. All right. So, and as promised, we're talking, here's some, there's improved cash visibility and liquidity, and here's some other use cases beyond just that as well. So, Rishi, why don't you walk us through some of the common use cases and what are some of the needs, and I'll jump in a little later.
Sure. Just before I jump into these use cases, I would say that these are not the only 4 use cases. There are plenty of use cases. Many of them are industry specific. So I wouldn't go into the details of any one industry, given the diversity of participants here. I'll speak to a few that are more generic and perhaps more applicable across. The first one I would say is contingent payments. And when I say contingent payments, what I mean is that any payments that are either made in response to certain business activity happening before, or payment that might trigger some subsequent business activities. And these tend to be, this could be treasury requirements, it could be business requirements as well, in terms of having such payments as part of your mix. I'll give an example here. Like, for instance, treasury, for instance, may want to hold on to a payment to make sure that an important shipment that was received by the business is inspected before a payment is released, right? So in those scenarios where the organization is looking to reduce the risk associated with a particular shipment, this can be an important tool that's available to you. Overall, if you look at broadly across all different use cases tied to contingent payments, I would say it helps you reduce your intraday credit needs, which is important if you're a treasurer looking to efficiently deploy your working capital. And it may be even more important if your financial institution does not offer intraday overdrafts for you. So all those are things to think about when it comes to contingent payments. Emergency payments is another common use case, and by definition, an emergency can happen any time of the day, week, or of the year, and any payments that you may want to make that is associated to that emergency cannot really be held because the payment system is not available. So ACH, of course, ACH-wise, all of them have a certain operating window, and if you are past that cutoff, you don't have the option to make that payment. And this has, of course, besides meeting the need of the emergency payment, it also lets you lower your precautionary balances that you may need to keep in your accounts. In fact, I've seen many of the customers that use emergency payments, real-time payments for emergency scenarios. For scenarios like emergency payments to employees, could be disaster situations as well. Third one is more in the context of the broader payment digitization that we were talking about. As many, in fact, most of you are in the process of transitioning from checks over to electronic payments, I would say you should give real-time payments a careful thought there, because you may have an opportunity here to leapfrog directly from a check-based payment type to a more modern real-time payments. And here is where it can have a direct impact to you in terms of the level of confidence you can have on your cash forecasts. So let's assume if you're one of those businesses that makes a lot of disbursements using checks, and you know that you have control over when you issue the check, but you have no control over when that check is cashed. So it creates a lot of uncertainty in the cash forecast that you might have. And you should have real-time payments in your mind if you're already in the process of migrating away from checks. And finally, I would say operational costs in terms of making payments, and I'll dive a little bit deeper into this in the next slide. Brian, before that, do you have anything that you want to add?
Yeah, no, I appreciate that, Rishi. I was going to comment on a couple of my favorite ones out of this on this slide, in particularly are the certainty of your cash forecast and whether it's daily cash positioning or looking at things 5 to 15 days out or even beyond, being able to hold on to your liquidity until the very last moment, even beyond an ACH, which you might have to send the day before or 2 days prior, having that ability to hold on to your liquidity until the very last moment. And I think when we go to the next slide, understanding that the cost is very comparable to other types of payment methods, payment types, like the Nacho or wire payment formats. This being able to hold on to that liquidity, paying at the last minute, and then knowing that it's successful offers a lot of value. In this day and age with yields increasing and the cost of borrowing intraday, as we mentioned in the first use case, that's creating a lot of opportunities and also challenges for companies that are accustomed to borrowing on the short term for their liquidity needs. This could help alleviate some of that. And then I think going back to something we mentioned earlier about that, the follow-on activities, you make the payment, but also there's the notification and the acknowledgement back within seconds. Having that certainty and confidence in your cash levels. With checks, frequently we used to have to set up different percentages of clearing that we basically made on assumptions of past behavior, and it wasn't accurate at all. So this takes away and removes the uncertainty around the timing of check clearing, and really helps with certainty and confidence. That's the biggest thing for me personally, is that reduction of ambiguity around your cash for on a daily basis and for the short term. So yeah, and then I think that's kind of the main points I had there, Rishi, on this one. Are we ready to jump into the next slide?
Yeah, just one more point before we move on. So when you look at real-time payments, my suggestion would be to look at it not just in the context of making the payment, but also look at it from the perspective of being able to get real-time balance back on your bank accounts, as well as real-time transaction reporting. You have, as you think about moving to real-time payments, I think these three capabilities go hand in hand. And payment orchestration providers like Kyriba and of course the participating banks, they all have those APIs. Some are more mature, some are not, but those options are available. So that give you a lot more control in terms of not just making the payment, but also getting access to the information that is then subsequently important for your other activities that you from a treasury perspective.
Yeah. Excellent.
So here, this is maybe a deep dive into the last point that we had on the previous slide. So what I've done here is outlined the median cost to pay and get paid. So on the left-hand side, it is cost to pay, and then on the right-hand side, it's the cost to get paid. And the key point to take away here is that the cost of paying using real-time payment and getting paid using real-time payments is comparable to most other payment types, and in some cases, far more inexpensive. And the cost numbers that are there are from the recent AFP cost survey, and it includes both the direct costs as well as indirect costs. By direct costs, I mean the fees that you as an organization might be paying to your financial institution or other providers. And then there are all other costs, could be labor, could be time, all the other indirect costs that should be considered when thinking about the cost of making or receiving a payment. And on the payable side, I would say a lot of corporates that I speak with, they are extremely interested in moving some of the wires they have over to real-time payments. And there are a couple of reasons for that. One is compared to wires, real-time payments are certain and irrevocable. So you get some of the same benefits that a wire payment gives you, but at a much lower cost. The only limitation, as we talked about earlier, is that there is a transaction size limit, which is $1 million here in the US. But if you are one of those organizations that has a reasonable volume of wires that are $1 million or below, this is a low-hanging fruit. All you need to do is work with your provider, enable real-time payments, and simply shift those payments over to real-time payments. It's just the easiest way to get immediate benefit out of any investment that you make in terms of your transition from whatever payment mix you have to the payment mix that you may want to get to, which is more optimized in terms of costs. On the receivable side, again, comparing it to wires, the cost advantage is similar, and the limitation, of course, is the same, the $1 million limit that I talked about. I would emphasize the comparison to cards here, because if you have one of those businesses that receives a lot of payments from cards, which can be extremely expensive, it's anywhere from 2 to 2.5% of the transaction size is what you pay to the card companies. You can simply eliminate that cost. And in fact, I remember one example of an organization in the food and distribution industry. They were able to save close to $5 million on a monthly basis by shifting a substantial portion of their card transactions over to real-time payments. So depending upon what your business is and what your payment mix is, these benefits can be substantial. So something that you should keep in mind in terms of prioritization, prioritizing any of the decisions that you're making within your organizations about modernizing your payment operations. Anything, Brian, that you want to add here?
No, this one is very straightforward, and it's very evident that it's a viable option. That from a cost standpoint, if you're just looking at purely cost, transactional cost per transaction cost, it's looking at the median cost ranges. It's definitely a no-brainer to consider this as part of your mix, in my opinion.
I would agree.
All right. So let's look at a use case for a client, Hunt. And Rishi, walk us through some of the challenges and how they benefited from real-time payments.
Yeah, absolutely. Hunt Companies is an early adopter, is a client of Kyriba, and they were able to get some of the benefits that we were talking about in the previous slide by virtue of shifting some of their wire payments over to real-time payments. And their challenge basically was that they're paying high bank fees for wires and spending a significant amount of their effort in terms of researching and resending any wires that would fail. And I think the even bigger limitation for them was that sometimes these rejection for wires would take hours, if not in some cases even a couple of days, and which was creating a lot of inefficiencies in the way they were operating. And by virtue of using orchestration solution like Kyriba, they were able to connect with their preferred bank or financial institution. So clearly, from a cost perspective, they were able to, of course, gain a significant advantage because they were paying about $6 per wire, and they were able to shift to about $1 per RTP, which was substantial overall. And not to mention the productivity gains they gained by not having to spend all the time investigating the failed wires and resending wires and so on and so forth. I would say that Hunt Companies is still at its early stage of integrating real-time payments into their broader payment mix. So it's still less than 10% of their mix. But as the transaction size limit grows and more banks are enabled for Hunt, these benefits will only increase over time.
Yeah, absolutely. And I do want to emphasize too that it does take a solutions provider that has market-leading bank connectivity as a part of the entire solution. There's the payment types and the formats and the pre-delivered capabilities around setting up the payment itself, but that connectivity is important to connect 1,000 banks or more. Having that library or catalog of bank connectivity options at your disposal really helped speed up this project and make it even more successful from a timing standpoint as well. So that was very important. And yeah, to see that the payment mix is it's less than 10%, they have a lot of opportunity to grow and expand as well. Just to follow on to your comments, Rishi.
Yeah, absolutely. Totally agree.
All right. Excellent. Well, we're gonna shift now from talking about payments specifically to how another development in the banking and the corporate world, and also Fintechs around open banking and how that translates into further digitization of payments within the US, and specifically how does it help with real-time payment adoption as well. So we're going to talk about open banking and really what is it, and how has it shifted some of the opportunities that are available across all three players. So I'm going to let Carlos take over here and kind of introduce us to open banking. Carlos.
Thanks, Brian. So open banking, many of you are probably already participating in open banking, but don't necessarily know exactly what it might mean or how it's defined. So what is open banking? Open banking provides, third-party financial service providers access to bank data, bank transactions, et cetera, from both banks and financial institutions. So by doing this, open banking is enabled, it allows users to access data that typically wasn't available to them before. This is, of course, enabled by technology, as we've been talking about through this entire presentation. Also regulations and services that allow developers and other fintechs to create new banking services and change the banking model as it's traditionally been known as. And this in turn can lead to new commerce capabilities for corporates and clients. So third-party organizations such as Kyriba and other fintechs and other developers are able to access the data through the use of APIs. And we've talked about APIs and open APIs throughout this presentation, and we will be talking about it a little bit more as it relates to open banking. So for the consumer, open banking promises to provide more choices, right? You don't have to stick with the traditional banking model. you can use open banking to complement a traditional banking model. And this can lead to better service, more open commerce, and more service offerings.
Absolutely.
So with that, I think we also have a poll question for the audience here. Maddie?
Yes, you'll see the third poll question pop up on your screen. Has your organization or your clients shown interest in moving toward open banking and away from traditional banking?
This one shouldn't be too hard since there's only 3 answers here.
There's only 3
Right.
answers. So yeah, this is one of those easy ones, hopefully.
We'll give people another couple of seconds to finish up,
Sure.
and then we'll end and share.
Okay, well, and I think this is kind of expected. From my perspective, because I think depending on the mix of people then attendees, there's different perspectives. But I think we'll at least be able to show some of the impacts, right, Carlos?
Yeah. Yeah, I mean, it is expected, there's traditional banking, of course, has been here for hundreds of years and is not going anywhere anytime soon. So the notion of open banking is something that is new and exciting, but that, I think adoption will be, rather slow compared to some of the other technologies like real-time payments that we've been talking about.
All right, I'll continue on. There we go. So, Carlos, I'll let you start up with this one and talking really about what are some of the technologies that are enabling this open banking shift and perspective.
Yeah, sure. So as we talked about before, there's open banking is being enabled by third-party developers, Fintechs, and other what we would consider maybe non-traditional financial or banking institutions. So open APIs are enabling connectivity between backend systems. So the backend systems that the banks have, the data, that is really, what is enabling a lot of the open banking systems and applications that are being developed. It's helping drive new technologies related to banking, and in many cases, creating new banking and financial systems and applications not historically served by traditional banks. So open banking is really not meant to replace traditional banking, but more along the lines of complement it. So, having open banking can help customers, expand their customer or their reach. It can also stimulate innovation and hopefully increase revenue for many organizations.
Yeah, let me. I'll offer one example of where we're seeing a good use case and a developing use case around the open API platform, which Kyriba has an enormous catalog of APIs that are available, and in one of those scenarios is onboarding your ERP or connecting to your ERP, connecting the bank and the corporate to the bank to the corporate's ERP. That there's a large need for that, whether it's for some payment processes that can't be run through the Kyriba Payments Hub. Maybe it has to bypass and it's direct to the bank. There's that connectivity, and then there's also on the bank reporting side for all the statements, whether they're traditional prior day and intraday bank statements, or even API-enabled real-time bank reporting that is starting to become more prevalent as well. A lot of that kind of scenario is being enabled through open API technology. It removes the batch processing, if you will, of the running of jobs back and forth and calls through traditional technology. It's a new way to speed up the integration as well, because a lot of these APIs are just that. They're pre-delivered, pre-configured, and pre-tested to help corporates connect their banks to their ERPs much faster. And then the banks, in turn, they don't have to invest as much time in developing a project team and the weeks or months that takes. I think probably many of you on the phone can probably relate to the fact that onboarding a new bank can take weeks, if not months, or years, depending on the level of expanse across whether it's the globe or just here in North America. It takes a while. And this type of open banking arrangement will help alleviate those longer timelines and speed up things like connecting to ERPs or developing payments connectivity.
Yeah, exactly. Very good example. And that leads us into our, our next slide here, where we show the open banking ecosystem, right? And so again, as we've been talking about, not only for payments, but for open banking as well, APIs are kind of like the heart of what the technology that enables this, right? It allows the banking data and the bank to connect to the other participants in the ecosystem in order to facilitate, real-time payments in some cases. Faster processing of loan applications is another example. And then, as you pointed out, the fintech partners that can more easily connect to financial institutions and banks with prepackaged solutions such that Kariba has for connectivity, so you don't have to work 3 or 4 banks to get that type of connectivity. It's more out of the box delivered with systems developed by fintechs such as Kariba. And banks have realized that they may have all the service offerings customers are looking for, and so they actually rely on fintechs to help fill a lot of those gaps. And this can help them retain customers. So, like I mentioned before, it's not really meant to replace traditional banking. It's meant to complement it. And the banks are on board, the fintechs are on board, and we're seeing more corporates and customers also start to realize and apply the benefits of open banking.
Yeah, definitely. Yes, just to follow on to your point about the core competency, the banks may not want to develop a particular service. It's not in their wheelhouse. It's not something that they have offered, but they can more quickly, by partnering with fintechs, they can more quickly access treasury management services, cash management, or getting visibility to investment needs for their corporate customers more readily by working with a fintech in this ecosystem enabled by open banking APIs and open API catalogs. You mentioned loans or investments, with loan applications, investments would be another one, cash management, working capital programs, supply chain financing, receivables financing, et cetera. All of these things become easier and faster, and there's a faster time to revenue for the bank. And then there's also less timeline involved in projects for the corporates as well.
Yeah.
I think from my opinion, Ryan, I think what open banking has done is really put the experience of the end user and customer at the center, because what this allows banks to do is really offer some of those experiences that were difficult or challenging for them to offer, in some cases because of the legacy systems that they had. So I think that it allows them to leapfrog a lot of those challenges and be able to deliver more, I would say, consumer-oriented services to their end customers.
Yeah, and that's an excellent point, Rishi, and it actually leads us into our next part of the open banking. How does open banking support payment digitization in the US? So, as you pointed out, open banking requires participation from multiple parts of the ecosystem and can provide benefits to each of them, right? So here we see, 3 examples: the traditional banks, the fintechs, and then the corporates, right? So banks typically have a wide distribution network, lots of customers, and for the most part, the trust of the customers, right? Fintechs can provide innovative solutions that can provide lower operating costs, new technologies, make transactions more convenient, faster, and secure. And then the corporates can adopt these fintech and third-party solutions to act as a bridge to traditional banking and offer customer-centric banking solutions, enhancing support and customer support, and allowing access to a wider range of products and services. The new technology, as you pointed out, Rishi, enables this more easily than some of the legacy systems that the banks are still running. Brian, I don't know if you, or Rishi, I don't know if you have anything to add to that.
No, I think you covered it all. I think this is an important development. In some markets, I would say it's being driven more by regulation. In other markets, it's being more driven by the customer need. But nevertheless, it's happening and it's available to all those participating to take advantage of it.
Yep.
Yeah, no, nothing to add here. It's just there's a lot of benefit, and the important takeaway here, I think, is that it's mutually beneficial for all involved in this with these new developments around open banking, and it's greater innovation, it's more value, and it's more efficiency as well. And with that, Carlos, can I move on to the next slide? I didn't mean to advance too quickly there.
We covered it.
Okay, awesome. Well, I think, how are we doing on time, Maddie? I think we've got a little bit left, a couple minutes left.
Yeah, we can wrap it up in the next couple minutes. I don't know that we'll have time for questions, but.
Okay, well, here I just wanted to give a quick overview of Kyriba and what we're doing as far as continuing to lead the marketplace in global liquidity and treasury management solutions. We're 100% native cloud. We've developed all of our technologies in-house. And the big point here, I think, as it relates to our conversation today, is our extended API, open catalog of API that are available for use by our corporate customers and our white label banking partners. We're global in nature. We have over 170 plus countries that we're being used in, across 80,000 plus active users, and we have over 2,000 clients. If anyone wants to learn more, please reach out to either Rishi or myself, or visit our website at kyriba.com as well. So thank you. I just want to say personally, thank you for Rishi and Carlos to help facilitate this great session, and thank you, Maddie, as well.
Yeah, thank you, Brian and Rishi, for joining us. We enjoyed having you as a partner at the Lear Treasury Experience, and hope to have you back next year or sooner than that.
Yeah, Carlos, I do see one question from one of the participants. I think it says there are plenty of benefits with RTP, but what happens when RTP is sent in error? What things are put in place to recover funds if possible? It's a great question. Just a minute, if it's okay, I can answer that.
Sure, go right ahead.
Yeah, so to specifically answer this question, yes, given that RTP is irrevocable and final payment, it's important to have the right set of controls and workflows in place to make sure that these errors don't happen. But if they do happen, there's a process with the bank wherein you can work with the bank to recover your funds.
And Rishi, that process is so much faster too, because can you speak just quickly, 30 seconds? Before it could take hours and most likely days before you might even realize that a payment was made in error or that it didn't settle properly. With real-time payments, it happens nearly as fast as you deliver the payment instruction.
Yep, absolutely.
Yeah. Thank you.
All right. Thank you so much, gentlemen. Next up, we have our session Unlocking Data Analytics Potential for the Modern Treasurer at 11 a.m. Central. That one will be a few minutes after the hour is when we'll get started with that. A link for that session is available in the chat, as well as a link for the CTP credit exam for this session is also available in the chat. Thank you so much for joining, and please make sure to follow us on social media platforms, as well as engage with the hashtag ETE 2022 on Twitter and LinkedIn to be entered to win one of our many drawings for Lear swag throughout the event. Thank you again, and we're excited for our remaining day 2 sessions.
Thank you.
Thank you.